I hope this one continues. I'm going to delete this one. Delete that one. Okay. I'm going to turn on. I'm waiting for the notice or a comment that I'm actually live. Let me see. To do later. Okay, I'm going to install that later. We're going to open up YouTube. Let's see. 12:01. I guess I'm live. One watching. I guess nobody's here. Boom. Let's go to live chat. I think YouTube just doesn't alert people anymore that I'm live. I don't know why. It should. Let me see. I've got to extend this out. There we go. I don't know why. Let me see. Does it look full screen? There we go. Now it's full screen. Now we got you full screen. Okay. Morning, John. Yeah, Larry, I'll look at UNH. I'll add that to my social requests. I think I said it yesterday. It turned over. I'm holding. UNH is one that I'm just going to add as it does more. It's kind of, and this is very short term, and we'll look at long term. But in my mind, you're looking at this kind of, I mean, this goes back to, I can bring it back to, well, you know, this is the earnings. Let's just bring this back to the earnings right here. Because you're definitely looking at this kind of, you're up here. You're still in the upper echelon. So you still have confirmation of it. But you have to hold over 555 for it to continue up there. And that's all-time highs. We can go over to FinViz. Let me just make sure this is monetized. Because yesterday it turned monetization off. Yeah, okay, we've got it. Let's go to FinViz. 52-week highs. 553. So you're at your 52-week highs. I don't like holding it at 52-week highs. And like I said yesterday, I think it's turning over. But healthcare as a whole, if you just look at, and I'll do it much better than I'll probably do it on the podcast, but look at XLV, which is the healthcare. And if we go out and we look at a weekly of this, I mean, you just haven't done anything since August. August of 2021. So, well, UNH, I mean, if we go to Seeking Alpha, and we go to UNH, and we're going to go to charting, and we're going to select metrics. I'm going to do performance. I'm going to do total return, and select symbols, and we'll do XLV. And we're going to do, what, 3 year? 3 years probably a good one. I mean, look at UNH versus XLV. So you've outperformed the entire sector by, what, twice, 3 times? Yeah, just almost 3 times. So UNH has been a solid one. If we go and we look at XLV and we look at their holdings, Bum, bum, bum. United Health Group's 10%. That means it's the largest holding in XLV. That means that the rest of this sector just hasn't done well. And that's the only thing that worries me about UNH. Two things. The PE is a little bit high for a managed healthcare company. You can look at Humana and I think Cigna have about the same, but it's not crazy bad. Well, Cigna. What's Cigna's? CI, not CIG. See, Cigna's at 14. I mean, some of these other ones, Oscar Health, which has been crazy. You want a crazy one here. Let's look at a chart. We'll go to chart. We'll go to UNH, and we'll do a chart. Select symbols. You know what? I gotta select let's select metrics, performance. We'll do total return, update, and then select symbols, and we'll do XLV, and we'll do Oscar, OSCR. Now, look at the 1 year. Look at the 1 year. I mean, Larry, Oscar is not making money. They will. You can see recent upgrades. They're $8.75 and they're trading at $8.50. I mean, the average target price is $9.50. It's still 14% below its 52-week high, which was back here in June. So, but yeah, United Health, I'll put that in. And you know what? I'm just going to share this chart. Why not? And the only reason I know this, Larry, is I have Oscar as my healthcare provider. I don't mind them. They've actually done some really good things, which is provide free telemedicine, which saves them money, I think. Morning, Chris. So I think they do a good job. Let's do some scans because it's already, 8:30. Okay, core portfolio. UNH. Scans UNH with a cross up. But, UNH, if we just look at UNH and we look at a weekly on UNH, you can see it just hasn't, it's starting to get that next leg up. And am I adding at 550? It's hard to add at 52-week high for me. But they just had solid earnings. Their ex-dividend date just passed. Their next earnings are January 8th. So I just don't know when you're going to have a chance to add it. It's by far the best, healthcare coverage, healthcare provider out there as far as returns goes. Well, I shouldn't say that Oscar's doing better, but it's the most solid, I should say. You just don't have the volatility that you have. And you're outpacing XLV because the rest of the healthcare sector just sucks. So it's a tough one. And I wouldn't discourage anybody from taking profits in it. But it's it's one that my dad has held for a long, long time. RYLD. This is the Global Russell. That's IWM. Okay. if I didn't say it, good morning, Chris. Morning, John. Morning, Larry. This is about 70% energy, Gary. Although, as I go on, I just don't have the stat. I mean, I'm still sick. So the dog was really sick yesterday. And my apologies for getting off the stuff so early. But she wound up having a really tough day. And tough day by. She threw up about 10 times. And SMDD, UDOW. And emptied her stomach, was shaking, and seizures were close. Never had, but I mean, you don't know if she had a seizure because she could have had one, and you just don't notice it per se. Ironically, Larry, XLV has a cross up. I mean, the buy-in was down here, but you have another MACD cross up for another leg up, even though the RSI is at 65. So, are you looking, Larry? Are you looking to get out of it at UNH or get in? Because I'm not getting. Again, my point is I'm not getting out, but I don't know that it's a. If you're a long-term investor and you're looking to hold this, I'd add 10% of the total position that you want into it if you're not in it yet. But it's a tough one at those. I mean, listen, everything's tough in this freaking environment. There's not a lot that's beaten down. Annaly Capital, look at that. I mean, if you want to REIT with a high dividend, these things have started to come back. I mean, you can see this one's down here at 15. You're at 18 right now, and you get a huge dividend. Let's see. Annaly Capital. Oh, why did I put it up there? NLY. 15% dividend. And look at that bounce. You're still in a long-term downward trend. If you look at a weekly on this one, you're still kind of just sitting there in that gap. I mean, that gap just started to get filled, but yeah, SMCI, they did come out with that news. NVIDIA, you shouldn't be buried with. NVIDIA, Travis, NVIDIA, just buy and hold it. Don't worry. It's a 465. Don't worry. This is not a short-term trade. If you're buying NVIDIA as a short-term trade, you're doing it wrong. And kind of, I put up, I didn't put it here. I will show you. I went over this in the past, Okay. I'm going to show you that. Those are my brokerage account gains for Apple. Okay. This is since 2007. Hopefully you can see that. Hopefully it shows up on camera. One is 977,000. One is 237,000. The other is 46,000. Now, Apple is my NVIDIA. I just decided to hold it. And I've gone over this many, many times. If you go a monthly, let's go monthly. Because I've said this, I did this chart yesterday where I held through a 63% downturn. I held through a 42% downturn. I held through a 22% downturn. All of these downturns, I had those, and I wind up just making money. You've got to decide, do you want long-term or you want short-term? If you're in NVIDIA short-term, you should play it short-term. So any of these pullbacks that you're seeing, you should absolutely 100% play for the short term. But SMCI, this one's tough because I know they're down 5% in the pre-market. Let's go to the strategy tester. I'll just look at it real quick. Because I'm in this one. I think my average price is around 270. And with them, you can see the algorithm gets you out with a 4% gain right here from the 260, which was right around the earnings. I do think that you're going to get up to this 350 mark, but that, I mean, it's 2 million shares. So you look, SMCI has 52 million shares. So it's not a huge amount. They're selling because they can raise the capital now, and it's capital intensive business. Travis, I'm not saying that. I am saying if you're in this for the long term, I think SMCI is a semi-long-term one. I think that they're a really good business at a good valuation, and they're not going anywhere. They do have some intelligence that they're able to do. They're the best in the business at putting these rigs together. But these rigs have a end date. I mean, it's not forever that they're going to be installing these. Just right now, they're killing it. And they're going to they should continue to grow. Their 52-week high is 357. You are 23% down from that. You're 282% above your 52-week low. The average target price for this stock is 375. Most recently, they came out with a this was October, $413 price target. 327 from Barclays back in September. Underperformed in neutral with a 250 was back in August. You can see back in April and stuff, these guys were saying, hey, it's underperforming and it should be 65. That's just out the window with what they've been able to do. So I don't think, am I buying more at 250, 259? Probably. I'm probably adding to my position at 259. I think this 200-day at about 261. We're down below that. Anytime you're below that 200-day, in my mind, I think you're fine for SMCI. Now, NVIDIA, I think you're wrong if you're selling NVIDIA. I think you just add more in NVIDIA. It's expensive, but they have such a gain on everybody in the AI chip world. And they have such pricing power. It's going to come to an end. Maybe people are ordering too many chips, but I just don't see it ending. But here's SMCI. You can see right here, since around July, we're putting in that kind of capitulation right there. And the bottom is about 235, and the top is around 325. So I think if you get in the middle of that channel at about 270, I think that's where you buy. That's why my average price is about 270. So Travis, your guess is as good as mine where this stuff is going to go. Trust me. There is nothing that I know that you don't know. That's why, here, the number one thing that I've got in my notes today is this. This tweet right here. This tweet right here. Fernando. Black Swan event tomorrow on the S&P 500. It can drop 300 points in a single day. That was a tweet from Wednesday. Don't listen to a douche on the internet. You got to understand your risk tolerance. What helps me sleep at night, I mean, you can see, even Tom Lee was the one who posted this one. If you want to see Tom Lee, let's look at Tom Lee. Fun strat. Let's see. He's posting his dinner. Right here. Did this happen? No. Fernando has 17,000 followers on Twitter. You know how many Twitter followers I have? He's got 17,000 followers. I have 758. Okay? Does Fernando know something that I don't? No. So, Travis, I'm no genius. I'm just a guy who kind of buys some stocks, tells you guys when I buy them, tells you what I think, but you're going to have to sleep at night. If you're that underwater and it's bothering you and you're losing sleep, sell the shit. Sell it. It's not worth it. But if you believe in long term and you can stay it out, remember, Do not trade in the stock market with money that you're feeding your family with. Do not trade in the stock market with money you are paying your housing bills with. Do not trade in the stock market with money that you need within the next 6 months. It's not the way you do it. That will make you lose sleep. That will make you just not. It's not a good world when that happens. So hopefully that answers your question, Travis. Nah, Larry, don't worry about it. I mean, if you're long term, you just add more when it dips. I think you're going to have a chance to buy United Health at about 530, 520. I don't know that it comes back down to 500. But I remain to say, if that thing comes back down to 500, Larry, load up. Just load up. It's hard when it goes back down to think, oh my God, I'm going to load up. And SMCI, same thing. It's hard because you want to believe bears and stuff. Yeah, it's Travis. It's different businesses. Look at it. I mean, look at Devon. Devon, they're giving cash back. Their PE is 7 and 6. Meanwhile, Exxon, these guys are at 10. So it's an energy. But you'd say Exxon and Chevron, which are providing oil, and if they went out of business, we'd be in far worse shape than if PanW or CrowdStrike went out of business. If PanW and CrowdStrike goes out of business, the world continues to run. If Exxon and Chevron go out of business, the world actually would probably stop. So, yeah. Yeah, I just, SMCI, I just don't see the 2 million shares. I mean, we can look, let's go over here. And I'm doing this just for you guys. I'm not going to put this up there because I continue to think, look, buy, strong buy. After pricing $524 million in security offerings. I don't see it as a major event. I see it as just something, they're taking advantage. Look, earlier this year, this stock was at what? 52-week range, 69. Earlier this year, this stock was at 69. You would be, if you were a CEO of a company whose stock was at 69 and you could issue more stock, which, by the way, you don't have, if you need capital dollars and you're issuing stock at 260, you don't have to pay 8, 9, 10% for that debt. You just issue more stock. You get $524 million. They have plenty of cash on hand. They're making a ton of money. Let's see. Cash on hand, $10 per share. So they have what, $5 billion? $520 million? They just doubled their cash. So they're able to, again, build the business. Here's the difference. AMC, when they devalue, they're losing $502 million, okay? They're issuing stock in order to fund the business that is losing money. When SMCI issues stock, they are funding a business that is actually making money. So it's an investment. So I don't see it as a huge downturn. If I were the CEO, I would do the same damn thing. But Travis, I reiterate, if you are losing sleep over that trade, get the F out. Just get the F out. I should probably, you know what? I'm going to put this in let's see. I'm going to put this at the top of the thing. SMCI issues more stock. Don't worry. To when I'm going to make that point. So Travis, thank you for letting me make that point. My point is SMCI issues more stock. Don't worry. I'm going to put this. We're just going to put this. I'm going to put a link to this. Yeah. And Travis? Yeah. Go long. Buy more. I'm telling you. At 260, just buy more. I think that long-term, if you look at the weekly and that long-term channel that I put in there, that's what I'm looking at. I'm looking at now you're at 250. You're below the middle here, which is about 264. You're trading at 260. I think you just buy more. Doesn't mean you load up. Means, say you've got $1,000 in this. Maybe put $50 more into it. Maybe put $100 more into it. You don't want to go with $1,000 more. You don't want to double down. But I think you're fine. I think the business that I know of, again, I don't know much, but the business that I know that they do, I think it's a solid business. In fact, I think they're far better than NVIDIA. That would be my take on it. Oh, I got to announce too. I'm going to up the price of the newsletter. Let's see. Maybe I'll do it in the middle of the month. Lulu has a cross up. Baker Hughes is always in there. Autodesk, this one since their earnings, they dropped so much. This was interesting because they dropped so much with their earnings. Then they came back and just filled that gap. They immediately filled this gap. T-Mobile's just, that's just a monster. This is the XL Energy. Finally got to the 200-day. I'm not that excited by it. So we're going to go to S&P. And I skip some of these just so you guys know, just because they don't get me excited. Merck and UNH. Okay, let's go to the 4-hour. Let's see. You know what? Let's see which stocks in the core portfolio are in. Palantir, you're in on the 65-minute. PXD, you're in on the 25-minute. Uber. Oh, I should mention Uber. SMCI. I'll do it right after the SMCI. Uber. Pump. Let's see. Is it in? Let me see. Uber. Yeah. This could happen after the bell. So I'll put this in here too. Today after the bell, the quarterly rebalancing is announced. I think it's after the bell. But Uber is the likely one. If it happens, great. If it doesn't, we could see a significant pullback. Okay, I've got enough to go through this. There's a lot in the Boeing's in the 65-minute. Disney's still in the 65-minute. Most of this stuff's still in buying the 65-minute algo. Wah, 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 wah. By the way, thank you guys. The nice notes. What did I get? I need to look at my photos because I had 163% increase in followers. Maybe I'll go over to the Facebook group. Let's see. Oh, there's some people who posted, it looks like. Maybe not. Let's see. Wah, wah, wah. Yeah. I have 714 people who have me as the number one. And I think one of them is posted. Nobody posts. The 65-minute algo is great to trade with. I mean, God, if you want to trade, that just takes emotion right out of it. And if you find a stock that trades solidly on it and it's in an upward trend, you can just hold it. I mean, that's, again, if you're looking for Trend Spider, I should probably, let's look real quick. Plans and pricing. Yeah. So I need to change my link tree, in fact. Let me see. I should probably change the link tree real quick. Yeah. Oh. Damn it, man. Let me see. Preview. Change this. Copy. I gotta go into notes real quick. I don't want people clicking on it and thinking they can still get the Black Friday sale, so I'm gonna just change this. I've been promised. Done. And then we'll copy. And I'll go back over here, links. And what? Okay, let's see. Done. There we go. Okay. Morning, Sherry. Whoa. I mean, this is still a good deal, under $400. Because they upped their prices. Okay, let's go to QQQ. Hit the like button, by the way. Okay, let's see. We're looking at Cleveland Cliffs is up 1%. Materials are really doing well today. Roblox is up. Tesla's down. Okay. 4 hour. Take that out. Okay. Here we go. Wow. Okay. Ooh. Honest up 5 days. Something is up. What's honest is the honest company. Hoof. You're heading right for this gap up here to 270. Morning, Scott. Hey, Michael. Yeah, Michael, you're not the only one. I'm still shocked, okay? So I had 163% increase and this is just Spotify. So understand it's not Apple Podcasts, so it's about half the audience. But I had 714 people who had, this was just a couple of hundred last year. So I've had 160, I was telling people if I had 163% gain in my portfolio, like overall portfolio, I think I'm up about 43% year to date. Yeah, the core portfolio did well. And remember, Scott, here's the thing. That core portfolio is equal weighted. So if we just go over here to Savvy Trader, so it's not even weighted towards the stocks that I own in my portfolio, which are heavy tech stocks. So you just look at it, core portfolio up 9%. Okay, we're gonna look at this against Qs, and we'll look at the 1 month. The core portfolio is up 9.412. NASDAQ is up 10.29. The NASDAQ's the only one that I'm underperforming because it's so good. So the Qs are just better off than even buying my core portfolio. But nobody likes buying the Qs. You know, here with 3 month, core portfolio is up 3.35. NASDAQ is up 3.19. If we look at SPY, core portfolio is just blowing it away. Core portfolio is up 3.35 over 3 months. The S&P is up 1.32. You look at 1 month, and the S&P core portfolio is up 9.45. S&P is up 8.77. And instead of 500 stocks, I only have 35. So 35%. I think that includes the cash, which doesn't include all this stuff. But you can see, I mean, it's 100 shares of each stock. And it includes the S&P 500 because I have VOO in there as well. So, but Savvy Trader, I'm not trying not to promote them because I do think that they're gonna rug pull. But honest company, let's look at this. What's going on? Sherry, you always find these for me. Yeah, there's some insider trading right there. Let's see. How many shares do they have outstanding? They have 92 million shares. They're losing $52 million. This is another makeup brand, isn't it? Household and personal products, yeah. I don't think it's makeup. I think they actually have an overall just product line. Diapers, wipes, yeah. Bath, skincare, home cleaning. It's Purity is what they're selling. Wonder if somebody's looking to buy them. That might be an interesting one. Okay, let me get into this because I'm going to be here forever. And okay. And I'm going to go over here. Well, I'm going to close this down. Okay, we're going to start out with this Spotify thing. Good morning. It is Friday, December 1st. Just a notice, I am going to increase the price of the paid newsletter. So if you're not a member, just understand those people who got in at $50 earlier this year, you're still going to pay $50 for the year. You're still going to pay $5 per month. Anybody who got in for $7, anybody who got in for $8, anybody who got in for $9, anything, you're still going to have the same price. You will renew at the same exact price as long as you continue it. I've been told that by Substack, that you will continue at that price. But as I get more paid content, I think it's better with the archives and things of that sort to increase the price. I'm not doing it to make money, but I do put a lot of time into that. So, but for the year, I wanted to basically tell everybody thank you. This is just Spotify, so it doesn't include Apple Podcasts, but I had 714 people where I was the number one podcast for them. I think like 3, maybe 1 have posted about it. So get on your high horse, do your wrapped up with Spotify, post it on social media, 163% in increase in followers. So I'm doing something right. Probably the markets are doing something right. People are finding me. I think I'm in the top 5% in business on Spotify. But the wrapped session was really, really positive for me. So thank you to everybody who's posted. Thank you for the kind words. Thank you for everything. And remember, support the podcast. I do this, I think I give a good value for what I give because I'm not out there charging an arm and a leg. I want to make more money through selling you the tools like TrendSpider and Seeking Alpha and through advertising. So I make no money on YouTube now. I think it's like $10 for the year that I've made on YouTube. Spotify pays me okay. I think that's, a couple $100. It's nothing huge. But so, again, I do it because I want you guys to make money. I'm a simple man with a simple system that doesn't do options. So if you're here to trade options, that's on your own accord. You can certainly trade options on my picks and my suggestions. I just don't, and it kind of came up earlier. Just make sure you're smart about your investments. I've been talking about this for about a week now, where I was starting to see a button hook. We're starting to see this. We're starting to see some weakness, and this is the Qs, QQQ. I'm still holding my TQQQ, but we're starting to see that button hook down here, and we've lost a little bit of the positiveness in this. In pre-market, the Qs are down 0.27, and you're starting to see this. Now, if I look at TQQQ, I'm holding a small position in my Webull account. If you have not signed up for Webull, first off, you're nuts because the link in my link tree gets you 20 free stocks over the holidays. That's just I put $1,000 into Webull. Click on this link, get 20 free stocks. Click on this link down here. Just buy Apple on Webull. Either one will lead you to the same place. I put $1,000 into Webull. I'm at $3,000 now for the year. TQQQ, I hold a couple $100. I think I put into TQQQ. Not a huge buy, but that's a good portion of my portfolio in Webull, where if I make, 10, 20, 30%, I'm up 40% on this right now. And I'm probably going to get out of this on a Friday because I just see it turning over a little bit. Doesn't mean that I don't think that a Santa Claus rally isn't happening. It just means I'm going to take my 40% profit. And if we get back down to 40, under 40, I like this stock under 40. Remember, this is a decaying asset. It has done really well because the NASDAQ has done really well. But in downturns, it just continues to turn down. So for a long-term one, this isn't one that you want to hold long-term. This is the one that you want to trade. If you want long-term, you want just the Qs because the Qs actually buy you the actual stock. TQQQ trades derivatives and options in order to triple lever. It's a very good trading tool. It's not a good investment tool because if the NASDAQ were to crash like it did last year, you are losing significantly more money. So understand you can't time these things. If you want to just buy it and forget it, you buy the Qs. The other thing that I want to teach people is do not listen to a douche on the internet. This is a tweet by Fernando. Fernando has 17,000 followers on Twitter. Not a minor Twitter user. Fairly good. He's got 600K views on this one, so it's almost 1 million. Black Swan event. This was Wednesday. Black Swan event tomorrow, meaning yesterday, and the S&P, it can drop 300 points in a single day. Well, it didn't happen. Don't listen to a douche on the internet. Fernando is a douche on the internet. I have far fewer followers than he is. I've been saying, hey, stay bullish in this market. Don't listen to a douche. Do your own research. Understand what you're investing in. Now, there was a question from Travis on the YouTube Live about SMCI, and I wasn't going to go over this, but they did do a pricing of 2 million shares, $524 million in securities that they're getting. They're diluting shareholders, but I wanted to make this point. They're diluting shareholders in a different way. SMCI, in my mind, not in my mind, but it is a growing business. They're making money. They would be crazy if they didn't do some type of stock offering. They were trading at $69 per share earlier this year. This is a growing company. They are making money. Their PE is not nuts, but they want to make more money. So to do that, they took the $270 price that the stock was trading at, and they issue 2 million shares of stock. Look, they had cash on hand, $10. So they had somewhere near 500 million bucks. They just got 500 million more. So they're putting that money. They're making income, 612 million bucks. Their PE is not crazy. This is a different situation than a company like AMC, which is losing $502 million, and they're issuing more stock at a higher price. This is a different situation. The thesis on SMCI has not changed. They still have strong buys. It does not change for this. Don't be worried about it if you're in this for the long term. I still see that gap covering coming. I still see it coming. It's just going to be a bumpy road. Right here in pre-market, you're at 261. I think if you can get this under 260, I showed the weekly chart of this one on YouTube Live, and I do think that this channel that you see right here is probably the channel that we're looking at. And the low portion of this is 232. You may get down there. The high point of this is 322. And that's where I think the channel that you're trading in is. If you want to trade this, you absolutely can. I'm simply adding more. I don't think that the thesis on this is over. I don't think that they're diluting shareholders for any other reason than to actually get cash. Now, NVIDIA got you out with an 11% gain in the algorithm. The thesis on this one is still, it's lost some of its confirmation. If you're trading this one, go ahead and trade it. I'm not going to yell at you. I just think at some point in time, NVIDIA is going to come out with some type of announcement. They're going to do something, and it's going to be back at 500. I'm continuing to add to this one. I just don't think that there's any downside to NVIDIA and sitting there and holding this. I want this in my long-term portfolio. So I am adding to it. Doesn't mean you should be adding to it. Just means do your research. If you want to wait for it to come down to 416 again, it may. I think that golden cross that we had here on November 21st, I think that's going to provide some upward. You have to cross the 50-day. The 50-day is at 462. In pre-market, you're trading at 464. So that's going to provide some support. But you do have enough volume up at this area to actually provide you support on this stock. I don't think that it's coming down. One that I think is a good one, the S&P index is going to rebalance at the end of the day today. And Uber is rumored to be getting included into the S&P 500. They had solid earnings. Right now it's up 0.28. You can see it's just on an incredible run. This $42 that we had October 31st, and you're at $56. That's an enormous gain. Now, I am in at that 42 price. I think my average price is somewhere in the neighborhood of 45, 46. I'm staying in this. If I see it start to lose its confirmation after the S&P inclusion is going to pump it a little bit. If it doesn't, I think that may be for me a time to sell, because I do think that this one's a little bit stretched right now, and I want to get it more at the $50 range. So I may start to trim and take some profits on the short term on this and just start adding, because I just want to take some profits. That's the only reason I would actually sell Uber, not from a long-term standpoint, but more a short-term standpoint where I think I can buy it in a little bit better. Now, here's a tweet where yesterday, the best performing stocks in November. You can see Affirm, Roku, Coinbase, I don't own. Square, I do own. VinFast, I don't own, but that's up 55%. Shopify, I do own, up 54%. Pinduo, Duo, Datadog, Expedia. A lot of these I do own. DraftKings, Snapchat I own. In fact, I'll show you Snapchat later. Snapchat has just been on an absolute tear in the past 10 days, not even the past month, past 10 days. GoDaddy, Cloudflare, Palantir, I got out of. CrowdStrike, I'm still in. So you can look at that list. The stock market news is a good Twitter follow to actually follow. I think they have a great account. I think Evan posts a lot of quality stuff there. Tesla's Cybertruck event happened yesterday. There are 3 trims. Rear-wheel drive starts at $60,000. This is not including the EV credit that comes from the federal government. All-wheel drive is $79,000. Cyberbeast is $99,000. I was impressed, not overly impressed. I will still probably get a Cybertruck. You can see it's down 3% in pre-market. I just don't think they did enough to move the needle. And I think you come back down here to 213 or so. And I say this all the time. I'm scared of this stock. This stock moves so much. The valuation is absolutely crazy. I own it in XLY. I don't own it outright. It's just been a hard one to own. So I in my mind, if I had actually owned this stock, I'd be doing better off rather than trading it. I mean, that's just the flat out truth. There's no way to actually trade this one effectively other than taking profits because you wind up regretting selling it. Doesn't mean that I'm owning it because, this is a stock that has actually lost me sleep at night. So I don't want to own it. But I've done worse by actually trading it. Now, this is interesting. CNBC reported this. Cathie Wood's Innovation ETF is up 31% in November. Best month ever. Is this a return of Cathie Wood's? Has she had some justification? I don't know. I mean, it's just an interesting one if we look at ARKK. She's got some pretty impressive stocks in this. Coinbase. I looked at some of her stuff that she bought yesterday. She bought some plug. Which one was the one? PagerDuty. PagerDuty was her big buy yesterday, which was down. But ARK is kind of putting in that little button hook, if you want. PagerDuty had their earnings. PagerDuty was her buy yesterday, and it just kind of has done nothing. I mean, it just has been putting in that kind of stuff. Maybe she sees this gap up here at 24 and likes that. I mean, I know she's been adding all the way since 19. So, but best month ever. ULTA had their earnings yesterday. They had a good day. Up on quarterly guidance. This is one that I own at a much higher price. I mean, if I go over to Savvy Trader, I can tell you what I bought it at. It's in the 400s, but it's at 420 right now. I think that's about where I bought it at. I may have bought it up here at about 450. I'm not quite sure where I bought it. Not a great one. I think it's undervalued at this point. I think these earnings kind of justify it. In pre-market, you're up 12%. It's at 478. So you're up in this neighborhood and you've crossed the 200-day. You've got a positive moving 50-day. You've got a positive moving 200-day after this. If we look at a weekly on this, you've just kind of pulled back to the 200-day and you bounced right off. So at 478, which is where it's trading right now, you're at the 50-day. Another leg higher? Could be. I mean, look at how low that MACD is. That MACD could be making a move up. So I wanted to bring that up because I know it's ELF has been the big mover of recent, but ULTA just posted great earnings. Disney declares a 30-cent dividend. So they took 3 years off from paying the dividend because remember, parks closed. This is just crazy that we're at these levels. This is up 0.36%. It's at 93. I think you wait for this one to go under 90. 30 cents is not a huge dividend compared to what they used to pay. So 30 cents is not a game changer in my mind. But 30 cents, hey, it's a dividend. They're going to continue to add to that dividend. I think this is a stock that you absolutely could own. I think if Iger comes out and says, hey, we're trading back at the days in 2020. COVID candles were 16%. I think if he comes out and says, hey, we've got a partnership with Apple for ESPN and the sports that we have, and we're going to do our own, own thing with ESPN direct to consumer. You're not getting back to the days where they're charging each basic cable subscriber $13 for the ESPN suite. You're just not getting back to there. So he's got to do something innovative. I think Iger's the guy to do it. Disney's one, if you get it under 90, I think you add to it and you just sit there and hold it. I do have Snapify, and I will post this chart from yesterday in my in the newsletter. But if we go back here and we look at Snap, like I said, it was one of the best performers in November. This is just crazy. I mean, it's down 0.94% at $13. I wanted to take a look at the weekly on this one because we're so far below the all-time highs. Is this one moving back to the 200-day at 30? I mean, your guess is as good as mine. The valuation, they're not making money. It's a little bit crazy. If we go over here to Seeking Alpha and we look up Snap, it's a hold. I mean, nobody's got this as a buy. A couple of people from the November 20th have said it's a buy. Why I'm a Snap fan here, you can see nobody from the Seeking Alpha analyst to Wall Street to Quant has it as a buy. Doesn't mean it's not going to be a buy, but they're doing things right. I mean, Snapify is just doing things right. It got an upgrade from Jefferies with Pinterest, citing potential catalyst for revenue growth in full year 24. Snap was bumped to buy from hold with a $16 price target, up from $12. The bank sees the worst headwinds for Snap behind them. I'll include all of this in the newsletter if you want to read about it. But Snap shares have just been flying. I own this in my Webull account. I do own this in my Webull account. Believe it or not, I mean, listen, if you're going to have a Webull account, why not trade meme stuff? And I think you're crazy if you don't have a Webull account. I think you're nuts if you don't put some money into Webull. Click on the link tree. Put some money into Webull. It's fun. I'm telling you, that app is fun. Put $100 in there. Put $200 in there. YOLO this stuff. It's more fun than sports betting for me. I like doing that better than trading and betting on the Giants every Sunday, because I lose on the Giants every Sunday. But Snap, I'll include. This is part of the article that I said. This was from yesterday, but it includes some really good coverage on Salesforce, Snowflake, and things like that. I'll put this in the newsletter. That article will go in the newsletter. Another crazy moment in insider trading from yesterday. This is a unusual whale. Great account to follow on Twitter. Someone bought 5,700 IMGM 21 calls yesterday. 31% out of the money. Chain gets literally zero volume. Position stayed open today. And then AbbVie yesterday announces a buyout of IMGM. They turned $500,000 into $3.5 million in 24 hours. Somebody knew something. Just another, hey, insiders know stuff. And so somebody made, a quick $3.5 million on that trade yesterday. Will we ever find out who it was? I don't know. This chart got me yesterday because I am in 3 of these names, I believe. Yeah. So there are 3 names here that I'm particularly. One thing that I wanted to point out on this, CrowdStrike should be here and Fortinet should be here. It's just the logos are changed, but Fortinet is this one. CrowdStrike is here. Palo Alto. These are the biggest IT security companies. You got Cloudflare, Zscaler, Fortinet. Fortinet had some problems. Zscaler had some problems. I think they're working through it. I own the 2 big ones, Palo Alto and CrowdStrike, at $91 billion and $56 billion. I own those 2. Those 2 have been solid winners. So I'll include that chart so you can see it. You can go and look at the charts. Palo Alto Networks is in the core portfolio. PANW is the symbol. It's down 1% today. It's been on a tear since they announced earnings. I mean, they dipped right below the 200 day at 230. This one's almost $300 right now. That was $230 the middle of November. If we look at that position gain, if you got in at the bottom, you're up 26% in 14 days. That has been a crazy one. CrowdStrike, super similar. Look at this gain with the algorithm. I mean, this is just based on the algorithm. You're still in the algorithm, but it got you in at 180 on November 2nd. I said it wasn't worth buying before their earnings. They blew it away. 28 days, you're up 32%. So that's just in cybersecurity. Remember, put it in your mind. What company these days is pulling back on cybersecurity? So I saw this article yesterday about Charlie Munger. Berkshire would be worth double if he and Buffett used leverage. Leverage is, margin trading, things of that sort. And I don't believe in it. And Munger says if they weren't managing other people's money and they were smart about it, I just think the majority of people who trade with margin are not smart about it. So I'll include that article because you can read it. You can see what it says. ACAL. Hi, Gary. Been looking at EXPE. Any insights? I don't even know what this is. This Expedia? Yeah, Expedia. I think it's had its run. I think you're looking at similar to most stocks. You're seeing that little cross up there. The MACD has already crossed down. The RSI is at 64. If you're looking to buy it here, I think there's better places to put your money. Now, if we look at a weekly chart, if you're looking for long term on this one, I think you might be okay. I'd probably still wait till you get under that 200-day. But for long term, you've got a positive moving 50-day. You've got an evenly moving. It's kind of horizontal here. But let's take a look at the PEs because I do want to see that. Expedia Group, PE of 24, forward PE of 11. Not crazy, but it is kind of high. If they continue to grow with the forward PE and they continue to meet earnings, at 11, I think you're looking at $170 stock. You're at 52-week highs. You're not at all-time highs. Like we can see back here, the all-time highs are at 190. But I do think if they continue to grow, that 170 is probably in the cards. If we look at the average target price, it's at 133. I just, there's better places in my mind to put your money. November 17th. We're going to get out of that. November 17th, upgrade Evercore, 135 to 200. So their target price is 200. That's the most recent one. HSBC said hold at 114. I'd be a little bit careful. Let's see what Seeking Alpha says. I just, in my mind, I think this is part of the stock that has blown it, has just gone. You can see Expedia, 5 billion share buyback amidst record low valuation. I mean, they bought $5 billion worth of shares. Oof. That'll make your stock go up. You can see strong buy. I mean, for me, I'd rather buy a tech stock at a 52-week high than a travel stock. And maybe this is a tech stock. Maybe this is AI that's being integrated into their travel portion. And maybe they're changing the system and I just don't know about it. But, for me, Cal, it's tough for me to see Expedia as one. And I don't get excited about it. I don't want to nix it because I do think this one could go to 200. Because like they said, here, Evercore is saying it's 135. They moved it from 135 to 200. And that was just 10 days ago? So they think it's great. You can see there's some insider sales here of $1 million. This chief accounting officer, chief legal, just sold at 135. Sold at 135. Sold $10 million at 135. Chief legal officer said, there's not. I don't think that's an enormous sale. I think again you're at 52-week highs. So I'd be concerned, going in big into this. I'd rather go in big. The famous quote from Warren Buffett is, when other people are feeling greedy, be nervous. When other people are feeling scared, that's when you're greedy. That's the big thing. I think people are feeling, greedy now. It's FOMO, and it's FOMO for a reason. So I'd be a little bit concerned. Again, remember, I went over QQQ earlier. we may be coming in for a little downturn. Well, stocks that have run up in November may be cooling off in December. Maybe the ones that didn't run up in November will be the ones that run up in December. Larry asked me about UNH, and he said, hey, let's go over UNH. And I wanted to bring up this. There's a chart that I can do real quick in Seeking Alpha, and I'll include it in the newsletter, and we're going to go over here to charting. I want to look at three stocks with UNH, and I want to look at UNH against XLV and Oscar. And and I'll go over kind of why I'm doing this. But first, I'll select metrics. And if you're not in Seeking Alpha, you should absolutely be in Seeking Alpha using this as a comparison. So UNH against XLV, which is the healthcare sector spider fund, and just my own personal healthcare provider, Oscar. And if you go 1 year, it's clear Oscar's up 195%. The XLV is down 4%. UNH is up 2%. So it hasn't had a great year. Go over 3 years, and you can see Oscar is down 78%. XLV is up 25%. UNH is up 71%. So time matters. Time matters when you do this kind of stuff. And the 1 year on Oscar, part of the reason why Oscar is up so much, they're not making money. They're still losing $346 million, but they're losing less. So they're coming up next to a 52-week high, which is $9.39. You're at $8.50. You're still 14% below that, but it's up 249% year to date. It's just another healthcare provider. In my mind, I think UNH is probably the better one. But like I told Larry, this is kind of the range that I see UNH going in. Between 520 and 550, you're at 553 right now. Are you buying into this at 52-week highs? I just don't think so. If we go over here and we go to XLV, if you wanted to get into the healthcare sector and you didn't want the volatility of just one stock, XLV owns 10% of, and you saw it, underperformed United Health. In my mind, I think you want United Health. I think United Health is XLV. The other stocks in XLV, if they start to pick up, it may outperform UNH. But I think UNH has such a strong hold on the healthcare sector. I think that's the one you want. Am I selling it up here? If you're looking at selling it up here, if you've held it long term, I don't think I'd be against trimming it up here. If you're holding it short term, I just don't think it's worth it selling it up here. This is a mainstay. I do think you stay within this channel. And I think you can safely add it as it gets up here. If you want to sell it, I'm not going to be against it selling it. Personally, I think my average purchase price is around 470 or so. And that's all short term, all this year. I didn't own it before this year. My dad owns a ton of it. So UNH, ironically, UNH, another MACD cross up. And look, the MACD is right along the oscillator line right there. It hasn't gone up too much. So I that's part of the reason why I'm not selling it. The RSI is high. It's at 66. But I think I'm fine trading it within this channel. And if it gets down towards 520, I may just add more. But it did have a cross up, which means it's bullish. RYLD. And this is interesting because the IWM had one of the best months in a long time. And IWM is the Russell 2000. But this is the covered call against IWM, and it's got like a 9% dividend or something. This one has a cross up, and it's continued bullish. And the interesting thing about IWM is you're just getting up here to the 200 day. So your 50 day has started to move positive. This one at 164 to 179, great trade. I mean, that was right at the end of October. So here you're up, I think it's 9% or so. Let's see. 9.3%. So it had a great month. IWM, I typically don't trade in that stuff. TSLS. This is the short. You can do TSLS or TSLQ. This has a cross up here at 1979. We talked about Tesla being down 3%. The Cybertruck, I think they delivered 10 trucks. It's not going to happen until next year. I am not buying one of the first ones off the thing. I think it just came out. It was underwhelming. You can read, Marquez Brown is going to have a video about it today. I wasn't too happy with it because when I put down my reservation, he promised a 500-mile truck. And what they did to get close to 460 miles of range is they give you an optional battery that you can add to the bed of the truck to get it, the range up. I think you add about 160 miles to it. It is still significantly longer range than most other EVs. And I trust Tesla battery management. And remember, what you're paying for in an EV is not the truck. You're paying for the battery. The battery's $20,000 out of that car. So it's 35% of the actual car's value. Everything else can be replaced, but the battery's the expensive part of the car. And I don't trust GM. I don't trust Ford. I don't trust Volkswagen. They have not proven that batteries last long. Go and look up the Nissan Leaf and tell me that Nissan knows about battery management. Those had 120, 130, 150 mile range. You can buy one of those that's like a year old, and it's only got 20 and 30 mile range. They're not doing battery management. Tesla manages the battery better than anybody else. TBT is one. This is the Treasury, Lehman 20-year Treasury. This has a cross up at 36. I still don't think you want to buy it, but I'll include it in the newsletter. Why not? We got a bunch of levered ETFs. FAS, which is the bull on the financial, this got another leg up. I mean, if you got in at FAS at 53, which was the greatest call right at the end of the month or the beginning of the month, you're up 40%. I mean, TQQQ is doing the same thing. So, but FAS, great trade on this one. SMDD. This is the ultra short of mid cap. You can see it's kind of crossed down. So are the mid caps going to short, meaning that are the mid caps going to go down? They've been going up, but right now you're getting a cross up on some of these levered ETFs that are on the downside. Now, one on the upside is UDOW. This got another leg up, but the RSI is so high. I wouldn't buy into this. If you're in this from November 1st, you've had this one cross up and you're up 30% on just a Dow. XLV, the healthcare. We talked about XLV, buying XLV for UNH. XLV just got another leg up. It's got a cross up here, and it's just crossing the 200-day. That 200-day is going to provide some resistance at about 131. That's where you're trading right now. So I don't know that I'd necessarily get into this one. This is kind of why I'm like, healthcare. I think you can wait. It's had a little bit of a run. But if you're in UNH, I can't mock you for maybe adding to this one, even though it's high. Lululemon. This has been on just an absolute tear. 379, and then you're way up at 453. I think it's a $500 stock. Lululemon is just continuing their run up. Their all-time highs are back here at about 470. You're trading at 450 right now. But it had another leg up, another cross up, solid bull run. IBM and Merck are other Dow stocks that kind of came into play. IBM, just solid tech. We talked about IBM on a weekly. We can look at IBM. We can look at that channel. Remember how I said, and this was from way back when I put this channel in here, and I said it's just boring. But it's broken out to all-time highs here. Well, not all-time highs. If we go back to let's go to yearly. We won't go yearly. Let's go monthly. Monthly, you can see we're at all-time highs about 190. I think that's where you're probably getting back to. They have great AI. Okay. The TrendSpider sale is over, but you can still get it. They've got a great sale going on. If you want to use the link in my link tree, linktr.ee/dailystockpick. It is down below, so you can see it. Just use that link, and you'll get the best offer, no matter what offer is going on. When you use the link in my link tree, you will get the best offer. Right now, it's 72% off. Remember, it was 89% off. So it's $397. It's under $400. I continue to say whether it's $300, whether it's $200, I think the best offer you're going to get is $270, which was hey, this is our cost. In fact, my friend signed up for that one just the other day. I got a special dispensation for that one, and we put him under that one. I can't get you in under that one, but $397 is the price. It's a great opportunity. I mean, listen, you'll make that $100 back. If you were in my algorithm, let's just say you trade, QQQ. Let's take TQQQ. We're going to take TQQQ just in the algorithm here. And I'm going to remove all of these annotations because we're going to get this out. This isn't what remember, I bought it before the algorithm said to get in because November was a solid. I just bought it because it was, seasonally, November was a good month. So say you put $1,000 into TQQQ because you wanted in the algorithm and you trade and you get out today. $1,000, 32%, you just made the price of TrendSpider just in one trade for a bull month. So don't wait on it. If you want it, get it. The perfect to go along with it is the Daily Stock Pick newsletter because you do get my setup in TrendSpider right here as part of the paid one. I give you 7 days free. Sign up for TrendSpider. Sign up for the 7 days free. Set it up like I see it. Just do that. I mean, it's nice and simple, but this Daily Stock Pick newsletter, it's free during the week. It's just paid on the weekends, and the archives are paid. So I'm going to set it up so it's a little bit, like I said, I am raising the price on that. Now, if you want Seeking Alpha is a tool that I absolutely love. The news. You can set up what I really like about Seeking Alpha. If you're a person who just works for a living, doesn't want TrendSpider because you don't use charts all that much, you don't understand it, this is great. Say I tell you Apple is a buy whenever it goes under 170. Set up a price alert. You can set up a rating alert for any Apple. But the key point that I think you want here is when you import your portfolio. This is the core portfolio. And when you import it, you get a health score. And so it analyzes your portfolio and tells you some things that you want to do. Your portfolio's valuation is lagging. My valuation is crazy, but I'm beating the S&P. And if you want to see it, I'm not promoting Savvy Trader because I do think that they're going to do a little rug pull and they're going to make you pay to see my portfolios. But I've got 2 portfolios over at Savvy Trader. You can follow one. The one that I would follow is the core portfolio. And if I just compare it against the S&P for 1 month, the core portfolio is up 9.45. S&P is up 8.77. If we go all time, I started this back in June, and it's equal weighted. So it's equal weighted where I just buy when something goes in, I buy 100 shares of it. When something goes out, I sell 100 shares of it. So it's not anything. But the core portfolio is up 5.15 since June. The S&P is up 3.71. That's not an equal weighted S&P. So they have an advantage over my portfolio. If this was weighted, I'd be killing it at like 10 or 15%. Because that's probably what my freaking portfolio, my personal portfolio is up. But again, the link tree gets you to everything. If you want to join our private Facebook group, that link is right there. All of the social media stuff is up in the upper left. The upper portion. You've got my Twitter, you've got my Instagram, you've got YouTube, Twitch. I'm not on there. I may start streaming there soon. You got Spotify, you got Apple Podcasts. If you want to tip me, it's right there. The email address is right here. It's dailystockpick3@gmail.com. If you want to sign up for the newsletter, that's down there. I've told you several times in this podcast, the number one thing that I think you should do in the month of December is take a couple $100, use this link, get some free stocks from Webull. It's 20. I think the current promotion is you get 20 up to 20 free stocks. I put $1,000 in there at the beginning of the year. Let's see. I'll tell you my live balance right now. It is $29.96. So I just passed $3,000 yesterday. Oh, I'm sorry. It's $3,004. So $3,004. I'm up huge in this one. This is, every now and then I'll buy a couple $100 of TQQQ. Every now and then I'll buy some Apple. Apple is my largest portion of my portfolio in there. Just so you know, I have $1,000 of Apple. So 30% of my portfolio is Apple. I have Boeing. I have $400 worth of Boeing. I have $500 worth of Caterpillar, which is actually down. I have a bunch of stocks in here. Snap, I told you that I have Snap. That one is up 10%. I have $300 of Snap. So it's just a fun app. I like it more than betting on football. Again, if I lose that $1,000, my life isn't changing, but I've been able to grow that thing like you wouldn't believe. It's a lot easier when you're just having fun trading. That's why I say put a small amount in there. I don't think your main portfolio should be in there, but I do think that there's an advantage to having an app that you actually like trading in. If you want a Tesla, if you want to buy a Tesla, use this link. You get $500 off and 3 free months of full self-driving. Visible, $20 off your first month. The plans, it's $25 or $35. If you're paying anything more than $25 for your phone service per month, you're out of your mind, because this is a great service through the Verizon network. Again, it's the time of year where you give. If you've made money this year with me, if you're part of the 741 people who I am your number one podcast, give $1. Give a $5 if I've made you money. If I've lost you money, do not tip me. And if you don't have the money, do not tip me. I'd rather have the money in your pocket. I'd rather be making you money and then you guys give me money. But it's always nice to get a shout out. It kind of motivates me when I get any kind of tip, no matter the amount. I just, it tells me that I made somebody some money. And that's what I'm here for, is to make you guys money. So if I have any moves, I'll probably put them in Savvy Trader, but understand I'm still looking. If you guys have any websites that you like where I can post a core portfolio and you can track it and I can journal my trades for free, just let me know. I don't want to charge you for it, because I don't like people following my trades. I just like to kind of, hey, I'm getting into this one. I don't put ones that I'm trimming. I don't put ones that I'm adding to or I'm taking a little bit out of. That's why the trading portfolio over at Savvy Trader, if you go and look at the trading portfolio, it's got stocks in there and it's not totally active. I don't continue to add to it. If we look, the top gainer is DraftKings, which I'm up 35% on. TQQQ, I'm up 28% on, but I've added more in TQQ, so I'm way up even in that one. Shopify, I'm up 36%. That's an $80 stock. Uber, I'm up 20% on. Amazon, which was a big buy. I bought 16. I'm up 16% on that. IONQ, which Brandon got me into, I'm up 12% on that one. AMD, I'm up 8% on that one. You can look. In fact, ULTA has turned from negative to positive. I'm up 4% on that one. It was around 450, I guess, that I bought it at. NVIDIA, I'm down 0.14%. So I need to add more NVIDIA. I'll add more NVIDIA to that one. But I'm way up on NVIDIA. PXD, I'm down 0.82%. I've added more to that one. I like that. SMCI, you can see. I think my average purchase is around, like I said, around 250, 260, somewhere in that neighborhood. I've added to it. I continue to like it even at 266. PayPal is one that I'm down on. I'm riding it down, but it's on its way back. If we look at PayPal, I think some people followed me into that one. I'm still kind of looking at that one as a one that could bounce back. It's small money. I have added a little bit to it, but I do hold a rather large position in PayPal. In fact, I'll tell you how much I own in PayPal. I'll look at my Fidelity account. Fidelity is my main broker. I have a small account in Webull, but Fidelity is my main broker. They do such a good job. I love Fidelity. If you're putting anything more than $2,500 into Fidelity, let me know. I'll hook you up with my guy, Stuart, who will give you, I think it's $100 he gives you in a gift card. But let's see. Let's look at PayPal. All positions, PayPal. I've got PayPal. I'm down, looks like 30 or 40%. I've got, it's about $7,000 total. So I'm down about 30, 40%. Looks like I'm down about $3,000. So, but that's not all recent. A lot of that's long-term where I bought in at the 200 level. If we go out here to a weekly, you can see It's just been in a slide. I think I bought it right as it started to pass the 200-day right here, about 160. So I've added to it on its way down. I drank the Kool-Aid. I do think that this is a solid. I use PayPal. My preferred is Venmo. So I like Venmo significantly more. So if you're going to tip me on Venmo. Cash App is my second favorite. So, but PayPal, I continue to think that they have a good business. So I've got more investment in PayPal. No, I'm sorry. I've got more investment in Square, in Block, because I do think that Square with Venmo does it better. So I've got more in this one, but I am down even more because when this one crossed the 200-day, I started adding in larger segments. You can see it bounced right back up. And as it crossed again, I started adding it. That's around 120. It's 64 now. So I'm down significantly on this one. But I mean, this is trading where it was when the world shut down. I continue to think that both of these continue to go up. So if you have any questions, hit me up. Okay, I will talk to you guys Monday. Take care. Have a great weekend. Yeah, Scott. Tom Lee has been, like I always say, he's been wrong. He was wrong for the entire 2022, but over the time when I followed him, he's been more right than wrong. You're welcome, William. QQQY, I think I did a good job of telling you I'm not the guy to comment on that. Those two videos that I gave you in the newsletter yesterday were far superior than I could ever cover QQQY, but it's so new, it's unproven. It's kind of like SPY. I'm in SPY. And if we go over here, I'll show you. We'll go to FinViz, Seeking Alpha. SPY. This charting, and you should absolutely use charting in, I'm going to do this. We're going to select metrics because the total return is really what you want because that includes the dividend. And if we SPY, and I just do SPY, okay? And we're just going to do, it hasn't even been out 1 year, I don't think. SPY, I guess, has been out 1 year. Yeah. Look at SPY. I mean, it's even with the dividend, you're underperforming SPY. You're underperforming SPY because the dividend is paid out. Dividends are a way to actually raise money. It's not a way for returns. So QQQY, in my mind, even though it's new, you look at QQQY, and we'll look at select metrics, performance, total return, and we'll look at it against QQQ. And I think we're only going to get 1 month or something. Let's see. Yeah, there's 1 month. Look, QQQY is underperforming. I mean, it's just underperforming. So I appreciate when people ask about them, but you got to do your own research about it because people are in different situations. If you want income, QQQY makes sense. If you want returns and long-term compounding, QQQ is the way to go. QQQY is just a way for, say you're retired and you don't want to buy bonds. For some reason, you think that this is going to provide you, bonds will continue to lose their value. QQQY makes, let's see, can I do 20 year? Let's do 10. No. I guess 10 year. No, I guess you can't. Okay. Yeah, Scott, you got to Dan Nathan, in my mind, has just been the Mike Wilson of a different, the Mike Wilson who's on TV every day. And I don't trust Dan Nathan. I think gives solid analysis, but when he keeps on telling me that Tesla is a trash company, a trash car, I kind of weigh that in my, listen, he bought a Ford Mustang GT the electric version. And he returned it after a month because he said road trips are crazy. And it's true. And he's like, but I'd take a Ford over a Tesla all day. No, wrong. So I take I like listening to him because he gives a good perspective. I just don't think that, those guys, I think Guy Adami's the best, my favorite on that one. And Danny is really good. Danny knows his shit. So, listen, Danny was in the Big Short movie. Not as he was one of the characters, not an actor in the Big Short. He was one of the characters from the Big Short. He knows his stuff, but they are very, very bearish. And you could be Mike Wilson. You could be Michael Burry. You could be Dan Nathan. In the long term, I don't want those guys managing my money. I mean, look at the 10-year of Qs. They were negative the Qs. I mean, let's just add in, select a symbol. They've been negative Tesla. And look at Tesla versus the rest of them. I mean, yeah, you're down on Tesla short term. But long term, anybody that bought Tesla, 5 years ago? We'll even do 5 years. Look, I mean, you're just killing it. This is not crazy to think that you bought Tesla 5 years ago. My car is, 6 years old. My 2018, September 2018 is my car. So, yeah. And if I put $60,000 into Tesla, what's 60,000 times 875%?
The answer is 525,000.
Yeah. My car ain't worth 525,000. But if I would have put $60,000 into the stock, when those guys were telling me it's crazy, all I had to do was actually drive the car. And like I say all the time, I would be better off buying and holding Tesla. So, okay. I'm out of here. It's 10 o'clock. I'm going to go edit this, put this together. You guys have a good weekend. I will have a paid newsletter out. Remember, I'm going to raise that price. So if you want it this weekend, get it this weekend. But I am going to raise this price probably after this weekend. I'm going to revamp the homepage a little bit this weekend. I'm going to work on it so it looks a little bit better, looks a little bit more professional. Will look like this, but I'll have a new section with a little bit better grammar with the paid section. And I'll put in some different sections in here too. I have a way of putting in different stuff. Okay.